All right, I got a news dump here for you guys today. Hudson's Bay is preparing to file for bankruptcy. Pretty sad. I mean, this business has been here since 1670. We've had Hudson's Bay here in Canada. But obviously, I don't think this comes as a surprise to a lot of people. You go into Hudson's Bay, it's empty. The store is huge. There's like maybe two people in line buying like underwear or something like that. And then obviously Sears went out of business not too long ago, and this was like the next closest thing to Sears. So pretty sad, but not surprising. And then next we have Royal Bank of Canada laying off some employees. And I think they're laying off some employees from their HSBC acquisition last year. So we're starting to see some pretty major cracks in the Canadian economy with both layoffs and potential bankruptcies. And then on top of that, now we have Canadian Tire restructuring, which is a nice way of saying that we are in a little bit of trouble with their closure of 17 Atmosphere stores. And I believe they're closing them across just Western Canada, if I'm not mistaken. And I believe it's just the Atmosphere stores, not actually the Canadian Tire stores. And they're also selling their Helly Hansen brand to Contour Brands for $1.3 billion. And then to add to all of this, China is apparently imposing tariffs on us. I didn't even realize that we were beefing with China, but apparently we have been back in October. Yeah, Canada imposed duties in October on Chinese-made electric vehicles and steel and aluminum products. The new duties became effective March 20, according to a statement by the Customs Tariff Commission of the State Council. Additional 100% tariffs will be imposed on Canadian rapeseed oil. That doesn't sound very good to say. Oil cakes and peas, and additional 25% tariffs will apply to pork and aquatic products. So we're getting it from every angle right now. Bankruptcies, layoffs, tariffs from the US, tariffs from China, and then we're getting our own carbon tax increase in April. So we're getting tariff from every single possible direction you can look in. And then for the people out there saying that basically we can fight the US with retaliatory tariffs and we're going to somehow beat them, that's not what Statista would say. They would say that the US is going to be, largely insulated from this whole trade war, while Canada and Mexico are going to get beat to a pulp by the tariffs. Again, now I don't know how accurate this is. I'm not the guy who compiled the stats. This is what they're saying. And I would probably agree. I think we would definitely lose this trade war. Now, I want to bring it back to the psychology of a market cycle, the cheat sheet, the Wall Street cheat sheet, because from my conversations with people, I would guess, earlier this year, I thought we might be in anger, because anger says, why did the government allow this to happen? Right? People are pissed at the government. People have been pissed at the government a lot. Right? So that's why this cycle has been confusing, because people were pissed at the government even back here at like Thrill. People were mad at the government, right? But if I had to guess, just from some conversations that I've had, I think we're kind of crossing over from denial into panic now. Just talking to other realtors and people in the industry and things like that, it seems like things are getting a little bit more panicky out there now. Now, that doesn't mean that prices are just going to fall through the basement floor. And I mean, like, you look at inventory across the market, some inventory in some areas is high, some inventory in some areas are average. And the market is very segmented based on what you have and what price point is it. And you can't just like blanket statement the whole market. But it seems like the sentiment is starting to shift more into like, okay, things probably won't be better for a while kind of a sentiment now, as opposed to things will be better next spring. Now, I know my videos lately have been like pretty negative. Like almost every video is like a negative video now. And like all my thumbnails are like, oh, like bad shit is happening, right? I still think if you're an end user, right? Like whenever you buy an asset, it's not always about like, am I going to make money? Is the price going to go up? I think what you actually need to look at is what is the risk to reward, right? And what you're trying to do as a purchaser of an asset is you're trying to buy an asset where like the reward isn't in direct proportion to the risk. You would want there to be outsized reward in comparison to the risk. And if you just did that consistently over the course of your life, you would be a very good investor, right? And I think, like as an example, right, if you were to buy an asset where the reward is a 2x, but on the downside, it could go to 0. Well, that wouldn't be a very good risk to reward. You'd want the reward to go to like 10x. It'd have to be 10x versus go to 0. And then that would be like a considerable risk that you should take. And I think when you look at real estate right now, as the price goes down and the longer we are in a correction, the reward is increasing while the risk is going down. So, we're over 3 years into a correction. Typically, time in the market usually points to higher prices at some point, right? So the more time we spend in this correction, the higher likelihood of prices going up, right? And then as prices go down, you're also taking away your downside risk the more that prices go down. Now, if you're an investor, right, I'm not saying go jump back in the market if you're an investor. I mean, you can do whatever you want to do. There's equities, gold, silver, crypto, whatever you want to do as an investor. But I think if you're an end user, this is still one of the best markets that we've seen in like the last 20 years to be an end user. Tons of inventory, tons of good product. I just had a conversation with somebody the other day who was basically forced to buy the condo that they're in right now back in 2016. And they had to buy it off market because when they were going into homes to try to buy something, they were competing against 15 other people. And she was like, yeah, I never want to do that again. That was so terrible. I'd way rather buy in a market that's slower moving, that's maybe a little bit more uncertain, but at least I have certainty when I am buying my place to live in because I can think about what I'm doing. I can put subjects in my offer. And not only that, I have like enough time to go see a couple places and then choose the one that I like the best, as opposed to like, I better buy this by 1 p.m. or it's going to be sold. And that's the market we're in right now for end users, right? So we're in a space where like I said, as long as you have stable employment, the risk is dropping. The reward is technically going up. I know a lot of people would argue with me about that, but technically it is, right? And then you can safely buy something. You don't have to rush into it, and you can do it, with subjects in your offer and all these kinds of things. And I mean, there's deals out there right now where you can even increase that reward and drop that risk, right? Like I had the one project in Langley where you can get a 530 square foot one bed AC parking storage for $409,000. And if you go on the MLS, there's nothing less than like $450K that's similar to that, right? So even after you pay GST, you're buying that with like a 25, 30 grand cushion in that investment. Even if the prices go down another 5%, you're still at, basically break even from where you bought that unit. And, everybody, like when it comes to real estate, everybody thinks like, well, how much money am I going to make in the next 2 years if I buy this, right? When I bought my first place, I just wanted to move out of my girlfriend's dad's house. You know what I mean? Like, I just wanted to be able to be like in my own place, not have to suddenly have my landlord be like, oh yeah, I've decided to sell. You got to like move all of your shit by like, next month or whatever. I wanted it to be in my control. I wanted to do the customizations in my house that I wanted to do. And I wanted it to be, like I said, in my control, whether I want to be able to move when I say that I want to move. It wasn't about how much money am I going to make. It was, I don't want to pay rent. Sure, it's more expensive now, but I know 5-6 years from now, I'll be saving money over, me renting a place. And I need somewhere to live anyways. And I want to have control over how long I can live here for and what I can do with the property while I live here. As opposed to every single decision I make needs to make me hundreds of thousands of dollars in the next 2 years. But anyway, yeah, I mean, Canada is getting sandwiched from every side right now. China, US, and ourselves when it comes to taxes and affordability. And now you're starting to see, unemployment go up, which is a negative feedback loop because a bunch of people get laid off at this business. Those people stop spending money over here at that business. That business forces to, that business to lay off people. Now those people get laid off, stop spending money at that business. Now that business has to lay off people, and it becomes a self-fulfilling or like a negative feedback loop, so to speak. And we're just kind of starting to see the start of that now. But anyways, if you want to chat with me about buying or selling in the Fraser Valley, you can book a call with me using the link down in my description. Otherwise, hope you enjoyed the video. Appreciate you for being here. I'm that Agent Kelly, and I'm making moves to move you. Peace.